Managing your finances is different now with the emergence of digital money. We are now on a whole new level as Bitcoin and cryptocurrency arrived. What are those? And should you be meddling with those kinds of things? Welcome back to the Crypto Hub. And for this episode, we will balance out the facts in putting all your money in Bitcoin. But before that, subscribe to this channel and turn on that notification bell to get updated with our videos. So here are 5 reasons why you should put money in Bitcoin, and why you shouldn't. For our pro-Bitcoin sympathies, here is our number 1. It's becoming famous. During the past few years, the number of people who are using Bitcoin has been increasing steadily. This does not only give a prospective future for cryptocurrency, but can also make Bitcoin a common thing in the succeeding years. Should this trend continue to rise, we can expect every aspect of Bitcoin to be better than it is right now, which means more market for buyers and more significant monetary value. Thus, having almost everyone hooked on Bitcoin is just the tip of the iceberg. It gives us a good sign of what Bitcoin is, what it will be, and provides us innovative ways to attain our financial independence. Number 2, Bitcoin is global. When I say it is global, it doesn't only necessarily pertain to the availability of Bitcoin. It also means that Bitcoin is now entering the world of macro finances. That said, Bitcoin can now actually save large global corporations, banks, even government funds from losing their value. With several crises that the world has encountered in the financing industry, we have managed to avoid economic fallout or minimize their impacts on the economy. We have evolved into assets, then credit and debts, and then liquid money from actual money. But all those seemingly have their flaws, so we continue to evolve. And Bitcoin gives us another option among these, while doing the same thing, to keep the global market moving and growing. Being a part of this incredible endeavor will open many opportunities for your financial growth. Number 3, the value is high and can be higher. One key factor to know is the value of a commodity is its rarity. Gold and diamonds are extremely rare, and even if it holds no physiological benefit, its scarcity declares its high value. Same works for Bitcoin. Since Bitcoin is a digitally mined currency, you can never actually see the total amount in the world. With that, the value of Bitcoin is high due to its scarcity. And that scarcity can increase, and so does its value. With the ever-increasing demand for Bitcoin as it gains popularity, its current supply can cripple. This crippling number can give us extremely high value per unit of Bitcoin if adequately managed. And so far, the cryptocurrency industry is doing well in balancing the supply-demand paradox in Bitcoin. Suffice to say, all that you own in Bitcoin can have its value double or maybe even triple as time progresses. Number 4, Wall Street is adapting. When one of the world's leading financial districts goes into cryptocurrency, what will you worry about? Wall Street has been experimenting on the prospect of cryptocurrency, and they have been quite successful. By December of this year, Bitcoin aims to raise its price by up to $318,000. That is a large amount of money, even in the ranks of Wall Street. With Wall Street supporting Bitcoin, we can expect the industry of cryptocurrency to progress hard. You better get your hands into these digital coins before it gets extremely expensive. Number 5, it has proved its resiliency. Bitcoin has been under many storms after losing a tremendous amount of value in a significant price crash. Bitcoin has been on and off in the mainstream media because of the repetitive highs and lows in value. Despite all these, Bitcoin has been proven to recover immediately and seems to be better than before. In mid-2011, Bitcoin's highest hit was roughly $30. It went worse in November of the same year by hitting its low for $2. But in April 2013, it surged high into $260 before turning into $1,000 in late 2013. The following events were a roller coaster ride, but in 2017, Bitcoin hit an all-time high of $20,000 per coin. It proves how Bitcoin resurfaces bigger and better every time it encounters a price crash. You may have your coins at a low value now, but wait until you see them reach a mind-blowing hit. What do you think of the pros of Bitcoin? Have you enjoyed it so far? If so, please leave a like before we continue our video. Bitcoin looks very promising. However, it also has its downsides. People who think it is wise to pour their money on Bitcoin may want to check the cons. Number 1. It's not really scarce. The concept of its scarcity is just an illusion. Unlike natural materials like gold and diamonds, whatever we have in this world is pretty much everything. If we only have 1 million tons of gold in this world as a whole, then that's all we could have. We cannot create more. But Bitcoin is a digital currency run by marketers. If Bitcoin's supply decreases, it can create more. Like money, its value is determined by those who make it and holds the largest sum. So, the concept that it is mainly scarce is just a myth, since we can create more if we wanted to. Number 2. It has minimal real-world use. Yes, you can't buy candy using Bitcoin. You cannot use it for everyday purposes. The real-world application of Bitcoin is limited to those enterprises that use it. Think of it as a casino chip. You use real money to buy them, but you can only use them inside the casino. So, if you have no plans to buy high-end cars, purchase stocks, or buy things on e-commerce platforms that use Bitcoin, don't try purchasing one. Number 3. Storage and security issues are worrisome. Hackers are everywhere. If you experience getting robbed at your house or on the street, having your digital coins get stolen is pretty much the same experience. When buying digital coins, you need to use a digital wallet to store them. However, these wallets are not highly secured. In fact, at the beginning of 2020, $1.36 billion worth of crypto tokens were stolen by hackers. The government does not protect these unfortunate events since they haven't transitioned yet into cryptocurrency. There are few or maybe even no laws to protect the ownership of Bitcoins. Number 4. Tax. Well, there are no taxes. Yet. Funny how the government doesn't have the means to protect your digital money but enlists them as your properties that need to get taxed. Yep, tax is hell. The basic understanding is that if you own it and it has value surpassing the limit set by the government's Internal Revenue Agency, you have to pay for its property tax. That is the system now. But wait until they decide to make a separate tax for Bitcoins. The tax situation can give you a headache. Number 5. It's a gamble and digital shenanigans all in one. While brains and knowledge about finance and cryptocurrency are essential when meddling with Bitcoin, it all goes down in your guts. If you gamble like a pro, this may be for you. But if you are not a corporate jock who commands money at the tip of his fingertips, then don't. Pretty much you're the latter, so don't try to explore the growing world of Bitcoin if you don't know how to manage essential finances by yourself. The urge to buy more coins is strong. With the fear of getting left behind, you might try to buy as many coins as you can, and that is not a good thing. So if you can save yourself from getting locked up, do so as early as possible. Have you tried Bitcoin before? What are your experiences with it? Comment below and share your experience. Now, would you put your money in Bitcoin? It all depends on you. After all, Bitcoin is still evolving through time, and these contingencies can be resolved. However, keeping a little cautious attitude won't be a bad idea. Just make sure that you handle your finances wisely and smart. Once again, you're watching the Crypto Hub, and that's all for this episode. Don't forget to like, subscribe, share, and turn on the notification bell. Thank you for watching. Goodbye!